Hello, I'm Kamal from Loyal VC. Let's talk about the VC investor paradox. Most people think of venture capital as a risky, illiquid asset class. So the paradox is, why are the largest investors in venture capital institutions that hate risk, like pension plans, sovereign wealth funds, and endowments? This is the secret that they know. As you can see in the first bar, one venture fund with 15 deals is indeed very risky. You might earn a 30% return or lose most of your money. Look at the magic which happens in the middle when you have 30 venture funds or 500 deals. First, your median returns increase. Second, your portfolio has similar risk to an equity fund and a significantly higher return. Even better news, early stage venture capital has historically been an uncorrelated asset with a correlation of minus 0.1 on a scale of +1, perfectly correlated to -1. This trend has continued in the recent past. The bottom table compares the NASDAQ to our fund, Loyal. They have moved in opposite directions in 4 of the past 6 years. Holding both asset classes reduces your portfolio risk. Institutions don't just hold venture to reduce risk, it's also about returns. Here are 10-year historical returns for a series of major asset classes. The top 2 are private equity and venture, returning about 2% more than US equities or 5% more than blended global equities. And equities, of course, outperform real estate and bonds over the long term. Optimizing risk and return is why endowments split their money roughly equally between 7 major asset classes. Venture capital is one of these 7, with the same 12% of the portfolio allocated as real estate or bonds. Now, pension plans are patient, so venture funds have run illiquid closed-end funds. You promise to give them money on demand over a 4-year period and can't redeem for 10 to 16 years or more. Individuals are different, hence the recent emergence of evergreen venture funds, where you can invest what you want, only when you want, and have quarterly semi-liquidity to potentially cash out early. Most evergreen capital to date has been allocated to venture capital fund of funds. Here is one popular one in gray, launched in 2022. Loyal launched in 2018 as similar features. Quarterly semi-liquidity with gates, massive diversification, and an evergreen structure with a $50,000 minimum. The big difference is in fees. Loyals end up totaling half those of the fund of funds. So there you have the VC investor paradox. One venture fund with 15 deals is highly risky. 30 venture funds with 500 deals is about as risky as a stock ETF and hence is a core investment asset class. And while the asset class used to be illiquid, semi-liquid options have recently emerged. Ask your wealth advisor about your options so that you too can consider investing like a pension plan. Thank you.